We saw some heavy falls on the Australian share market, with our market down by 2.7%. Every single sector saw falls today, and it does follow a very negative session in the US overnight, where we did see the S&P 500 down by 3.3% and the tech-laden Nasdaq down by 4.1%. There weren't many places to hide on the Australian share market from the falls, but we did see some bright spots, one being Amcor after its annual general meeting, and some positive outlook statements, the company up by 1.6%, and the gold subsector, which saw a rise of 1.9% on safe haven buying. But if we have a look at the causes of the volatility on the markets, we have seen the FANG stocks, or the technology stocks, declining versus the market. And we also have seen some concerns about the velocity of change in US bond yields, as well as the potential of trade wars. Having a look at US yields rising quickly, and alternatives were gaining some favor, but corrections like this aren't abnormal in terms of the market. We last had one in February where it was also triggered by US bond yields spiking, and back then the worst sectors were energy, utilities, tech and materials, and the best areas were financials, telecom and property. Today, the safe havens were in terms of the gold space, and we did see the property sector and the utility sector doing relatively well as well. Later on in the week, we will be focusing in on US earnings as third quarter earnings season kicks off. Growth of 19.2% is expected, and that would make it 6 out of 7 quarters of double-digit growth for the US stock market. The highest earnings growth expected to come from the energy, finance, construction, materials and tech space. So the next couple of weeks we'll be focusing in on earnings, and that will be a key for the markets. But today, a lot of red on screen and a hard day.